Hello investors, Nick Shaheen here, looking at Hyliion again. I did a video recently, it was pretty popular. The message there was pretty consistent. The whole sector, the EV sector, caught fire this year. You've got all these SPACs coming. This one at least has something concrete with the hybrid product that's like a step in between step. Today I'm going to just strictly talk charts because the fundamentals is on you. Technically, I mentioned it the last time, I'll mention it again. I won't harp over it, but I'm just going to tell you that if it loses the low it just set this week and in November and before that in July, there's a catastrophe coming on the charts. But that's a big if. I'm not saying it is coming, so please hear me out. I'm not saying there's a catastrophe coming. I'm saying if. So basically, if it goes below this line, I know it's so close. That's why it's so dangerous. That's why it makes it exciting. That's why it is what? A speculative trade. Don't get upset when I say that. Technically, that's the picture-perfect looking chart of a speculative bet. Because technically, the machines will sell it as soon as it loses this value. Doesn't matter what you believe. Doesn't matter what the fundamentals are and how come it's going to be great in the future. The stock is in trouble on the charts. How about that? Okay, so the stock is clearly broken, and whether the company is broken or not is up to you to find that out. But the onus is on the bulls. It's like a goal line stance, great team, winning record, and the other team has the ball on the 2-yard line. How likely is the other team going to score a touchdown? The likelihood here doesn't translate, but that's how close it is to the goal line. So good luck with that. There are some good signs. Job one is to stop making lower lows, and they hit a place where they have. Job two is, I don't mind the lower highs. What I want is higher lows meeting the lower highs into a point to make an exciting burst, right? So we're not there yet, but this is a daily chart, and it really doesn't serve the purpose. I'm going to zoom in. Again, we're just talking charts. So this is a 2-hour chart. So now I have a little bit more information, a lot bit more information. So you're going to have to trust me and follow me on the levels that I'm mentioning. So hopefully you can see that. Somebody complained about another video I did where I'm saying here and here I should say the levels because they probably have their setting on a lower resolution so they couldn't read these numbers. All right, so this is $20. Today, the 8th of December, popped into 20 and failed. So it closed minus 1.5%. Not a big disaster. The important part is this candle right here, which happened on the 7th, yesterday. There was a big green candle followed by at least one big green candle on volume. So in this past history, this is the biggest one. So I should pay attention to it. In addition, it is the point of control for this period of time, which is that baseline that they're trying to hold up. What is the point of control? It's where they traded it the most, bulls and bears, buy, sell, buy, sell, buy, sell. So it has the most volume at this price line. So this candle matters a lot. So relative to this candle, they're still closing above it. That's the good news I'm coming to today. Whereas before, all these candles were below it. They made this burst, and now they're closing above it. So job one is this candle right there. I'm going to put an arrow on it. It probably won't come out well once I zoom out, but this is an important candle right there. Oh, sorry. I do have lines. I forgot about that. This candle right there. It's important. Let's see if I can make it more visible to you. There it is. You can see it right there. You can see how all these candles to the left of it were below it, closing, closing, closing. And the accident happened just before that. And now they're the last, since yesterday, the closes are above it. You want to hold that. That's job one. Otherwise, why? I mean, you make this, you do all this work, and why revert lower? So it will need the help of the markets. Mind you, today the market set new records again. So you have that tailwind going, helping it. So what happens if that tailwind goes away and we have like a down day or two in the market? You know, so it's scary. You want to get out of this end zone, out of the 1-yard line, 2-yard line area fast. So job number 2 is this candle. So today, that was a bad candle. Not so much as to the level of which it reached, but how it reverted immediately lower. So now we have two candles battling each other, this one and that one. And this is a 2-hour candle. So this is a 2-hour stint. So that for 2 hours, they looked like they were going to do it, and then they failed. Where? So note 20.3. If you're taking notes, this is one, the 20.3. Last time they got there, they got shellacked, right? Down to 19. We're talking small amounts, but that's the lifeline of the stock. So what do you want? You want them to do a cup and handle off of that 20.3. If you don't know what that is, you probably heard of it. You've heard of Head and Shoulder. I was doing bullish or bull, you know what. Sidebar conversation with somebody else. Forgot it was there. So you got a cup going on here, and they failed that 20.3. You want them to hold that candle anywhere, but best they hold above that candle that we talked about. We're battling this candle versus this candle, and come back to the failure point of 12/8, the date, December 8th. Then the battle happens again right here. If they can come up above it and test it for support, they usually overshoot higher. How much higher? By as much as the bowl. So if this was the bowl depth from here to here, eyeball that, a buck, let's call it a buck, there should be a buck from here. So 21, but look at where that puts you. Yeah. So there's going to be a battle at this level. I'll see that the value is, it's 22, rounding. It's a little under 22, but let's call it 22. You can see it was a battle zone before that, so it has history. So now let's recap. Job number one is you want to stay above this candle. You don't want to lose it, which means that you're setting higher lows. Job number two, you want to re-attack the candle at 20.3 that failed on December 8th at 20.3. So if you do both, you get a higher low trend attacking a failure level. So price should ping pong inside of it, and then they decide to break out from it or break down from it. So let's talk about the breakout. Break out from it, they usually come back and test it for footing. If not, they go and fill the potential. How much is it? It's about $1. So that puts me into this open gap of recent. And they're usually, when they go into an open gap, it's usually easy to go. But sometimes gaps are there for a reason. If it's a fundamental reason, I don't know what happened here. But if it is a fundamental reason, then it's tough to break into them. So if I do catch this swing higher, I would exit or lock anywhere at 24 because it's going to have a lot of resistance in here. So you repeat the process up here. What is the process? What did we say? Cup and handle, right? We're talking now 2 breakouts away. And then a fade into the support now, then would be support, which is the problem now. And then come back to it. Repeat the process and then break out. How deep? This much. From here on out. You see, I just walked you through at least two breakouts. One minor that puts you into a bigger one. That's how stocks revert higher. So now, I did mention that we have higher lows here attacking a neckline. What if instead of doing that, they do this? Now job one becomes, we're no longer looking up, we're looking, oh my gosh, they better hold this prior failing point. Otherwise, remember the cup and handle? You've got something that looks like an upside down cup and handle. I'm not saying that that's what you have. I call them ladybugs because they kind of look like a ladybug. And if they lose their guts, if they lose the last bounce, they grow legs. How deep? Guess what? It should be as deep as the bull. So that's why I'm saying single digits if they lose the support. I'm not saying that's what's happening. I just started with 2 upside potentials. So I'm not calling for it. I don't want it to fall. I'm pulling for it. I just gave you the upside breakout scenario, and I just said, how can things turn to crap really quickly? So I'm not going to chart it. I have an arrow down. I don't say how deep it is, but based on the size of this, means the company is going to 0. But this is not the conversation today. The conversation is, how can I track it and what are my milestones. So now, again, to recap, the two candles we're talking about, this is the 2-hour candle if you want to reproduce it on your machine, is the one from December 7th, the big greenie that took us over the hump, and then this one that happened on December 8th, the let's go and then fade, and now higher lows attacking that failure level at 20 point, I'm rounding up a little bit, 20.3. So, you could probably get more granular by coming down in time frames. Now we're looking at 15-minute candles, and you can see that that's the fail that we're talking about, the 2-hour span we were looking at. And if I look left, it matches up with this accident scene right here and this cluster. So it makes sense. They usually don't just slice through it. Versus the nice little support zone we have at 18.8. So now we have a little better intelligence as to exactly what is holding up right now. 18.8, 18.9. We can come down a little bit, but you don't want to come down too much. You want to stay above this cluster. That would be the green candle here. That's the 2-hour green candle we were talking about. See that arrow I just drew? So this is the fight that's going on. It's a tight fight with a lot on the line. So again, triggers. Where's my trigger? I thought I put a trigger here. Add alert. So this will remind me, and I don't have to watch every tick. I probably will expect some selling at 19.7, and they should not lose these. There's a little gap here that's not a reason to short. I don't believe that every gap gets filled. This gap's going to be tough to crack into. Was this on earnings or something? I don't know what that. No, I don't know what that is all about. So anyway, this is the Hyliion. I know what it stands for. Somebody educated on me, and I still can't pronounce it right. It's hydrogen, lithium, and ion put together. It's a clever name, but doesn't flow off my tongue really easily. I'm sorry about that. So I'm pulling for it. I'm hoping this disaster doesn't happen. Comment away, just keep it clean. This is a family show. I didn't cuss, and I'm open to your other side of the argument. But know that I did not say it's going to zero. I said technically it's got a problem if it loses the last place it bounced from. If you don't subscribe to the channel, do it. It's free. If you'd like to join the chat room, we do this all day, one-on-one, every day, all hours of the day. Link down below. It's free to try out for 10 days. And it does take you to PayPal, but it's a $0 transaction. The reason for this is to protect my community. I don't want trolls in there. That's the only way. If somebody whips out a credit card, even if it's for $0, they're serious about learning something and being part of we have over 200 traders in the room, and ideas flow. Many eyes watching. The watch list is huge because every person has a watch list and they're all contributing. So it's pretty good fun in there. Nick signing out.